All right, let's dig into a massive earnings report from one of India's biggest consumer companies. On February 10th, 2026, Titan Company dropped its third quarter results. And believe me, the numbers are absolutely staggering. Let's get right into it.
So the big question right off the bat is this. In today's economy, how does a company of this size, a real giant, manage to grow its total income by nearly half in just a single year? It sounds kind of impossible, right? But the numbers, well, they don't lie. And here it is, the headline number. A stunning 40% year-over-year growth in consolidated total income for just the third quarter. We're not talking about a small startup here. This is a mature, established market leader we're talking about. Now, to really put that 40% into perspective, you have to look at the actual figures. The company's income leaped from around 17,500 crores to almost 24,600 crores. That happened in just 12 months. Think about that. That's a jump of over 7,000 crores in a single quarter. Just incredible. So what on earth fueled this amazing result? Was it just a case of everything going right for everyone, or did one specific part of the business just completely take off? Well, the answer is pretty clear. One specific division really acted as the main engine here, pulling the entire company forward with some serious horsepower. And here we have it, the jewelry division. Now, look at this. What's so fascinating here isn't just that massive income of over 22,500 crores. It's the growth rate. 42%. It single-handedly blew past the entire company's average growth. The other divisions, they did fine, but they were nowhere close to this. And this chart? Wow. This just illustrates the sheer scale of that performance. The jewelry business made up over 90% of Titan's total income for the quarter. It's not just the most important part of the company. For this quarter, it basically was the company. So the really important question is, how did they pull this off, especially with gold prices being so high? Well, the report tells us it was like a perfect storm of smart moves. They totally capitalized on the festive and wedding season with some blockbuster new collections and really powerful ad campaigns. But here's the kicker. They also drove incredible customer engagement with these attractive exchange programs, which got people excited to trade in their old gold for something new. But to say it was only about jewelry would be missing a key part of the story. So let's take a look at the other segments to get a really complete picture of the company's overall health. See, while they didn't have that same explosive growth as jewelry, the other key businesses all posted really solid double-digit growth. The iconic watches division grew 14%. Eye care was up 18%, and their portfolio of emerging businesses grew 15%. This shows a really strong, broad-based consumer demand across all of Titan's brands, which is a great sign. And hey, don't just take my word for it. The company's managing director, Ajoy Chawla, he confirmed it himself in his statement. He called it a stellar third quarter and made sure to highlight the strong performance across our key businesses and the broad-based consumer interest. So it wasn't a one-trick pony. Okay, so a great quarter is one thing, but smart companies are always looking ahead. And Titan's report shows they weren't just sitting back and enjoying the good numbers, they were making some major moves to lock in future growth. Towards the end of the quarter, they made 3 really significant strategic plays. First, they launched Beyond, their brand new lab-grown diamond jewelry line. Second, they completed a majority stake acquisition in Damas Jewelry, which expands their international footprint. And third, they just kept on with their aggressive physical expansion, adding a net of 49 new stores in just 3 months. This move into lab-grown diamonds with Beyond is especially interesting. It's a crystal clear signal that they're targeting a younger, more fashion-forward customer. By positioning it as this accessible line for self-expression and everyday style, Titan is making a really deliberate, smart play for a market segment that's growing like crazy. Okay, so let's bring this all together. When you look past these incredible headline numbers, what's the real story here? What's the main takeaway? The bottom line is this. Titan's golden quarter wasn't just some lucky break. It was the result of 2 things working in perfect harmony. On one hand, just flawlessly executing on that massive seasonal demand with their core jewelry business, and on the other, at the same time, making bold, forward-looking investments in new markets, new products, and a bigger retail footprint. It was, without a doubt, a truly historic quarter for the company. But it leaves us with one final, really fascinating question. With all these new strategic moves now in place, can Titan manage to turn this incredible festive sparkle into
Welcome back to the deep dive. Whenever I sit down to look at the financial markets, especially lately, I'm always reminded of that old Rorschach test.
The ink blot test.
Ink blot test, exactly. The psychologist holds it up, and one person sees a butterfly, the next person sees a terrifying monster. The stock market feels just like that to me.
That is a perfect way to describe it. It's essentially a collective hallucination backed by math. We are all staring at the same screen, but our own biases, they just paint the picture.
Exactly. But today, we're going to try to ground that hallucination in some cold, hard reality. Trading the ink blots for candlesticks. We have a very specific mission for this deep dive.
Okay.
We're looking at a snapshot in time. It is Tuesday, February 10th, 2026. The markets are humming, algorithms are firing off trades, and we have a fascinating case study right here. We are looking at the daily chart for Titan on the National Stock Exchange, the NSE.
And this isn't just, a random pick. We've got a technical chart from Nuvama that covers a really dramatic slice of history. We're looking at the period from, back in September 2025, all the way up to this very moment.
Right, up to this afternoon. So before we dive into the squiggly lines and the numbers, we need to set the ground rules. We have to be super clear here. We are not financial advisors.
Not at all.
We are not telling anyone to buy Titan, sell Titan, or even look at it sideways.
Zero financial advice here. We're strictly analyzing the mechanism.
Mm-hmm.
We're decoding the language of the chart. Think of this more like an anatomy class.
Okay.
We're dissecting the chart to understand how the muscles and bones of the market actually move, so you can understand what you're looking at in the future.
Anatomy class, I like that. Because when I first glanced at this chart you sent over, it looks less like anatomy and more like a heart monitor having a panic attack.
Yeah, it can look that way.
But you're telling me there's a coherent story here.
There is a very distinct narrative. It's actually a classic three-act structure, just like a good movie. Mm-hmm. You have the breakdown, the recovery, and then the test.
Huh.
And if you know how to read the candles, you can actually see the psychology of thousands of people fighting over the price of this one single asset.
Okay, let's get into the story then. Let's start with Act 1, the breakdown. I'm looking at the far left of the chart, so we're going back to late September 2025.
Right.
And visually, this looks painful. It's just a cascade of red bars dropping down.
It was a bloodbath. If you zoom in on late September, specifically around the 24th, Titan was, it was basically in free fall. It hit a trough of 3492.50.
Okay, 3492.50.
Now, for anyone listening, a red candle just means the stock closed lower than it opened. It's selling pressure. And when you see day after day of these long red candles, that's pure fear.
That's the market saying, get me out.
Get me out of here at any price. Yeah. Exactly.
Okay, 3492.50. I'm holding that number in my head because where we are today is a totally different universe. But I want to pause on that bottom because usually when things are crashing, people panic. But looking at the volume section at the very bottom of this chart, there's something weird happening right at that lowest point.
You spotted the most important clue.
It's a massive vertical bar sticking up. It looks like a skyscraper in the middle of a suburb.
That is the volume spike. See, in technical analysis, price tells you what happened. But volume tells you how hard it happened. It's the fuel. When you see a massive spike in volume right at the bottom of a crash, analysts call that capitulation.
Capitulation. That sounds like surrender, like waving the white flag.
It is exactly that. It's the moment where the last person who was holding on, just praying the price would come back, finally gives up. They can't take the pain anymore, and they sell. It's a total washout.
And that's a good thing.
Ironically, it is often the most bullish signal you can possibly get.
Wait. Unpack that for me. If everyone is selling, shouldn't the price just keep dropping into the abyss? Why is that bullish?
Well, think about the supply and demand of it. If everyone who wanted to sell has finally sold, who's left?
Oh, I see. Only the buyers.
Exactly. The sellers are exhausted. There's no one left to push the price down. The weak hands are out of the market. That volume spike wasn't just selling. It was a transfer of assets. Panicked investors handing their shares over to institutional money that spotted a bargain.
So it's like a forest fire clearing out the dead brush so new trees can grow.
That's the perfect analogy.
Yeah.
And grow they did, because immediately after that spike in late September, the color on the chart just makes a hard shift.
Yeah, we moved from that angry red right to green.
October 2025 was the turning point. We entered a classic uptrend. And it wasn't chaotic or jagged, it was structured. We started seeing a pattern of higher highs and higher lows.
Can you break that down for us? Higher highs and higher lows. It sounds like a tongue twister, but I know it's fundamental.
It is the heartbeat of a healthy market. So imagine you're hiking up a mountain. You climb up a steep section. That's your higher high. Then you maybe step down a few feet to rest on a flat rock. That's the pullback. But you don't go all the way back to the bottom. You land on a spot higher than where you last rested. That's the higher low.
Right.
As long as you keep doing that, step up, slight rest, step up, the trend is healthy. And Titan did this just rhythmically through November and December.
So it wasn't a rocket ship straight up. It was more like a disciplined hike.
Precisely. And that's sustainable. Rocket ships, they tend to run out of fuel and crash. A steady hike can go on for months. And that steady hike brings us right to today. We started at that low of roughly 3,500, where are we sitting right now, on February 10th, 2026.
I'm looking at the live data feed. As of right now, Titan is trading at 4338.80.
That is a massive move from around 3,500 to over 4,300 in less than 5 months. That's nearly a 24% gain in a very short window.
Wow.
For a large cap stock, that's a sprint.
And just to give the full picture for today, the stock actually opened even higher than it. It opened at 4350.00 and hit a high of 4378.40 earlier.
It did. It's flirting with all-time highs. But let's not get ahead of ourselves. We know the beginning, the trash, and we know the end, the high. The magic is in the middle.
Right.
I want to talk about how we could have ridden this wave without getting motion sick. Because looking at a chart in hindsight is easy. Living through it is hard.
That's the hardest part. Buying the bottom is luck. Holding through the volatility, that's skill. And on this chart, there are these lines overlaying the price candles that I assume are the tools for that skill.
They are.
There's a smooth red line snaking through the middle and 2 green lines on the outside. Let's decode these.
These are your navigational instruments. Let's start with that red line. That is your moving average.
Okay, so Eli 5 time. Explain a moving average to me like I'm 5. Or maybe, a reasonably smart 10-year-old.
Okay. Imagine you're walking a hyperactive dog in the park. You, the owner, are walking on a steady path. That's the moving average. The dog is the stock price. It runs ahead, it sniffs a bush behind you, it runs in circles. But ultimately, that dog is tethered to you. It can't get too far away, and generally it moves in the direction you're walking.
So the red line is the true value, or the trend, and the candles are just the
noise around it, basically. It smooths out the daily jitters to show you the real direction.
I see.
If you look at the chart, once Titan broke out of that September slump, notice where the price candles sit in relation to that red line.
They're almost entirely above it. It's like the floor.
We call that dynamic support.
Mm-hmm.
Throughout October and November, every time the price dipped a little, every time the dog ran back to the owner,
It bounced.
it bounced off that red line.
Yeah.
It didn't break below it. That tells you the momentum is supporting the price.
So if I was trading this, as long as the price stays above that red line, I'm generally feeling pretty safe.
Generally, yes.
Yeah.
It tells you the trend is still your friend. And there was a specific moment in early October. Do you see where the price candles cross from below the red line to above it?
Yeah, right there. A big green candle just jumps right over the line.
That crossover is the buy signal. That's the starting gun. It says momentum is shifted from bearish, where the dog is dragging you backwards, to bullish.
Okay, so the red line is our floor. What about these green lines? There's one way above the price and one way below. They look like river banks.
Riverbanks is actually a great analogy. Those are Bollinger Bands.
Bollinger Band sounds like a 70s rock group. Coming to the stage, the Bollinger Bands.
It really does. They were invented by John Bollinger, a legend in technical analysis, and they measure volatility. Think of them as the outer limits of normality.
Okay.
The price usually likes to stay inside these bands.
So what happens when the bands get wide versus when they get narrow? I see in late September they were really far apart.
Wide bands mean high volatility, fear, panic, excitement. The market is screaming. When they narrow or squeeze, it means the market's taking a nap. It's calm. But here's the cool part. Look at December and early January. Look at the relationship between the price candles and that upper green line.
They are literally glued to it. The candles are riding the top rail like a skateboarder.
That's a phenomenon called walking the bands. It is a sign of extreme strength. It means buyers are so aggressive they're pushing the price to a statistical extreme every single day.
And they refuse to let it drop back to the middle.
Exactly.
So if the price is hugging the top rail, that's not a sign to sell because it's too high.
Not necessarily. It's a sign that the momentum is just incredibly powerful. It's like a surfer riding the very crest of the wave. You don't jump off while you're on the crest.
You ride it until the wave breaks.
You ride it until the wave breaks.
And looking at this chart, the wave definitely broke. Because now we enter Act 3, the January jitters.
Yeah, the party couldn't last forever. If you look at early January 2026, the whole pattern changes. We hit a peak, and then we start to slide. The green candles turn red.
And the price peels away from that upper band. It looks messy. It gave back a decent chunk of change there.
It did. This is what we call a consolidation or a correction. And psychologically, this is where most people lose money. Not because the stock is bad, but because they panic.
They see the profits evaporating.
And they sell too soon, fearing another September crash.
But if we look at our riverbanks, the Bollinger Bands, they actually tell us a story here too, don't they? They sort of predicted the safety net.
They do. Look at late January, around the 29th. The price dropped all the way down, but where did it stop?
It looks like it touched the bottom green line.
Spot on. It tested the lower Bollinger Band. It went from the ceiling of the room to the floor. But it didn't crash through the floor. It held. That was a critical test of its resilience.
So if it had broken that lower green line?
If it had broken that with heavy volume, we'd be having a very different conversation. We'd be talking about a full trend reversal.
But it bounced.
It bounced hard. And that brings us to February.
Which is almost a vertical lineup for the last 2 weeks.
A classic V-shaped recovery. Investors saw it hit that lower band, realized, hey, Titan is cheap again, and they stepped in. In just 2 weeks, we've erased almost all of the January losses.
So we are back up to 438.80.
Challenging those previous highs.
It's like the stock held its breath in January and is now exhaling. Or, I don't know, maybe gasping for air.
That's the billion-dollar question. Is it a gasp of relief, or is it gasping because it's out of oxygen?
Well, to answer that, we have to look under the hood, because underneath the main chart, there's this separate little panel labeled RSI 14. It looks like a seismograph.
That is the Relative Strength Index, the RSI. This is your momentum gauge. Think of it like the tachometer in your car.
Okay.
It tells you how hard the engine is working relative to the speed.
So it goes from 0 to 100.
Correct. If it's over 70, the engine is redlining. We say the stock is overbought. It's usually due for a cool down. If it's under 30, the engine is stalling out. It's oversold and usually due for a bounce.
So back in that September crash, the RSI was probably way down near 30.
Oh, it was buried. It was likely well under 30. That was the buy signal. And in early January, when it was hugging that top rail, the RSI was probably screaming above 70.
The warning sign.
That was a warning sign that the January correction was coming. The engine was just too hot.
So where are we today? February 10th. We're new all-time highs in price. Is the RSI flashing red? Is the engine smoking?
This is the most fascinating part of the data. The current RSI reading is roughly 56.50.
56.50? That's kind of boring. That's right in the middle.
Exactly. And that is surprisingly optimistic.
Wait, how is boring optimistic? Usually we want exciting numbers.
Think about it. We're sitting at 43.38, basically the top of the mountain. But the engine's only running at like 50% capacity. We're in the Goldilocks zone.
So there's still room to run.
Theoretically, yes. If the RSI was at 85 right now, I'd be saying, look out below. But at 56.50, it tells us the buyers are steady, not manic. The stock isn't screaming exhaustion yet.
That's a really nuanced point. Just because the price is high doesn't mean it's expensive, technically speaking.
Expensive is relative to demand, and demand seems steady. However,
Always a however.
There is always a however. We need to look at the micro picture. Let's zoom in on today. Just today, February 10th.
Okay, microscope out. The candle for today, we said the open was 43.50. The current price is 4338.80.
Which means, visually, today is a red candle, or a filled candle. It's trading lower than where it started this morning.
And looking at the shape of it, it has these little lines sticking out the top and bottom.
Those are the wicks, or shadows. And they tell a story of a battle. The stock went as high as 4378.4 today. That means maybe at 10 a.m. the bulls pushed it up there. They tried to break out.
But they couldn't hold the line.
No. The bears stepped in at 4378 and smacked it back down. That upper wick represents rejection.
And it went as low as 4,313 fear.
Right, so the bears tried to push it down and the bulls pushed it back up.
Yeah.
We are seeing a tug of war. We're essentially unchanged for the day, but the range, it shows hesitation.
Why the hesitation? If the chart is so good, if the RSI is in the Goldilocks zone, why aren't people just buying with both hands?
Because we are at the previous peak. That January high is like a psychological barrier. Everyone remembers the price crashed the last time it got to this level.
Right.
So you have people who bought in September sitting on huge profits thinking, do I cash out now? Is it going to happen again?
Fear and greed. We're back to the beginning.
Always. The chart is just a map of fear and greed. Today's red candle is simply the market pausing to ask, do we have enough energy to break through the ceiling, or is this a double top?
It's the suspense thriller moment. The hero is dangling off the cliff edge.
And nobody knows the ending yet. The market is weighing the evidence right now as we speak.
So let's zoom out and ask the so what question. We have a listener who might not trade Titan. Maybe they don't even trade stocks. Why should they care about Bollinger Bands and RSI?
Because this applies to everything. It applies to crypto, to housing markets, to even your own psychology. The so what is realizing that progress is not a straight line.
Impulse and correction?
Exactly. If you look at this chart, that drop in January, it felt terrible in the moment. Headlines were probably saying Titan is doomed. But looking at it now, through the lens of the data, it was necessary pause. It was the market exhaling so it could climb higher in February.
And if you panic during the exhale, you miss the next breath.
That's it. And the tools, the volume, the moving average, they help you distinguish between a healthy exhale and, a death rattle.
That's the mission.
Yeah. We stop reading tea leaves and trying to guess the future based on feelings. We start reading the instruments to navigate the present. We see that volume spike in September and know, okay, the worst is probably over. We see the RSI at 56 today and know, okay, the tank isn't empty yet.
It removes the emotion, or tries to. It forces you to be scientific about it.
Critical thinking is the only edge you have in a world of algorithms. The chart cuts through the news, the rumors, the tweets. It just tells you what money is actually doing. Money leaves a trail, and that trail is the chart.
Well, we have gone from the depths of despair at 3,500 to the dizzying heights of 4,300. We've seen the panic, the steady climb, the January scare, and the V-shaped recovery. It's been quite a journey on a single screen.
And the story isn't over.
That's the thing, isn't it? The right side of the chart is always blank. It's the great unknown.
That's the unknown right side. We can analyze the history all day, but the future is unwritten.
I want to leave the listener with that image. We're sitting here on February 10th. Price is hugging that upper band again. RSI is steady. But that next candle hasn't formed yet.
Does that middle ground momentum mean we're gearing up for a massive breakout to 4,500, maybe 5,000? Or is the engine just idling before a stall?
The chart gives us the history, it gives us the context, but it never gives us a promise.
That's why we watch, that's why we analyze, and that's what makes it fun.
And that is where we will leave it for today. Thanks for diving deep with us into the Titan chart.
Always a pleasure to decode the data.
Keep looking for the story and the numbers, and we will catch you on the next deep dive.